Have you ever wondered what goes into a yield farm's success? Is it the money? Is it the investors? Well, of course these are helpful, but what about the lesser known predictors? In this video, we're going to go over the underrated predictors of yield farm success. Now this video is brought to you by the developer of Sugandi's tokens himself, Benjamin Rich. And yeah, he does have a PhD in scientific coding as well, so that might actually be helpful in what he's going to say. So without further ado, let's dive in. Before we get into any of this is not financial advice. However, this is educational advice, so take everything you hear as educational purposes only. Now, the first thing we're going to cover is total native liquidity, or TNL for short. Now, this is the sum of all the value stored in all native LP pairs. This value is important because it represents the native token's resistance to price movement. Furthermore, unless there are multiple native tokens, the TNL is equal to double the amount of real coins that investors can get out of a farm. It's also referred to as the amount of blood in the pig. Now, this value can facilitate calculations about things such as the advisability of depositing, but it is rarely displayed as TNL is not the amount staked, but the entire amount of native liquidity in existence. Now, the next thing we're going to take a look at is the TNL to TVL ratio. This is the ratio of TNL to TVL, or total value locked, which is one of the most reliable indicators of farm health. Now, this ratio represents the relationship between how much value can be extracted from the farm. Now, if you take a look at this yield farming page, Stone Temple Binance, you can see that if you scroll down all the way to the bottom, there's this nice little statistic that actually shows the TNL. The total TNL for this farm is actually $104,000. Now, not all yield farms will have the TNL. Actually, most will not. So it's mostly a hidden value for most yield farms, but this yield farm by Sugandi's tokens will actually show the TNL. So now if we go back to Stone Temple Finance, we can actually see there's two values, the TNL, which we discussed earlier, and also there's the TVL. Now, to find the TNL-TVL ratio, we can take the top number, 104,164.05, and divide that by the TVL, which is 1,244,049.52. Now, when we do that, we'll get 0.08370644283. Now, this is the TNL over TVL ratio. Next up, we have supply expansion. Now, supply expansion is the number of tokens that a farm mints in any 24-hour period. It's also displayed as a percentage of the supply at the beginning of that 24-hour period. Now, this statistic measures how much dump pressure there is on the ecosystem, and it's also a key indicator of future token price. Now, most farms don't display supply expansion. Why? Because it's simply too unfavorable for them. So, for example, if the majority of farms expand their supplies far too rapidly, they might display numbers like 21,600,000% supply expansion per day, obvious to any investor that it's going to not be sustainable in the long term. Now, this makes sense because if too many coins are minted relative to the existing supply, native stakers and liquidity providers are going to be hurt in the long term, because the token is going to inevitably drop in price with so many tokens minted. Now, there are two main reasons why farm operators might continue to emit too many tokens relative to the supply. The first is they're basically ignorant. Many farm operators don't realize that there's math involved. They don't do the mathematics, which leads to failure, because when they actually know the mathematics, they can do something about that. Now, the second reason is actually more common probably, and that reason is greed. Now, some developers will be very excited by the high APRs and they want to give high APRs to their investors. After all, as an investor, what's more attractive, a 2% per year farm, or if you see a 2,000% APR farm, or even higher? Of course, so greed plays an important role in the number of supply tokens available. Now, next up, we have liquidity provided. This is the amount of team liquidity provided as a key contributor to a farm's survival. Now, obviously, the more liquidity that's provided, the more there's a buffer against token price movements for investors to extract. If the liquidity is even locked or burned, it can also represent a team's financial commitment to the project. But there's also another another hidden factor. The amount of team liquidity provided is negatively related to the scaminess of a launch. For example, if you ever aped into a yield farm or a token that had a fair launch, some of them might have been rigged to start off with suspiciously low amounts of team-provided liquidity, followed by equally suspicious bot buys in the few blocks after launch. Now, this can lead to a situation where the person who placed the bot buys gets to make money at the expense of all the other participants, aka you, who buy after the bots. Now, providing team liquidity at fair value prevents this from even occurring in the first place. Next up is accessible treasury. This is the amount of money the project has available. It's not exactly fair to the little guys, but the amount a team is willing to spend on a project signals both commitment and ability to accomplish goals. Now, if we're prospectively analyzing a team's propensity to rug pull or exit scam, the money dedicated to the project is an obvious indicator of persistence. This is why the RugDoc KYC service is among the best values in the business. It provides a permanent signal of not only commitment to the project, but also financial outlay. Now we have founders' years in crypto. Believe it or not, seniority matters. A person's likelihood of having good ideas is directly affected by their experience level. Now, this ability to contextualize the current experiences of the yield farming industry in historical terms can impart the wisdom necessary to respond to certain situations. A founder who has an extremely high level of seniority might even have personal connections with people who can command large investments or have even bigger friends of their own. So of course, if a founder has more years in crypto, they're more likely to be successful in the long term than a newer founder. Next, we have token sink. A token sink is something else for tokens to do or place for them to go other than being dumped. In other words, a token sink is utility. Without a designated purpose, investors will dump for as many real coins as possible in a cynical race to the exits. Now, the last factor is called the live action roleplay or LARP factor. If you know what LARPing is, LARPers are those people who dress up and talk in Belvedere Castle accents while whacking each other with cardboard swords. AKA they pretend to be knights and warriors and magicians and everything, but they're really not. So what do LARPers and yield farm operators have in common? Well, they both pretend to be something they're not. Many yield farms pretend to have a token sink or other mechanisms that will make them sustainable, when in fact, most of these LARPs are either complete lies or recycled old canards that don't really work. The promise of fake things to come simply makes people hold the coins, creating a sink that is more effective than many real things. The recycled old canards are somewhat more difficult to dissect. Ultimately, because very few farms actually have any innovative ideas at all, a farm's ability to LARP effectively can be a key determinant of success. In the end, a yield farm can emit 4 tokens and call them fire, earth, water, and air, but if people don't want them for any particular reason, they're actually all called shit. Now, the LARP factor is probably the most underrated factor in a yield farm evaluation, as success in this area can single-handedly and drastically extend a farm's lifespan. So yield farm runners are well advised to put tinfoil on their best piece of cardboard and get to LARPing as soon as they can. Now, thanks guys for watching this amazing video. If you have any other questions about yield farms at all, join us on our Telegram channel in the link below. And as always guys, stay safe in the DeFi space and have an amazing day.